Hello and welcome to Bloomberg Quint Live. You're watching Trend Spotting. I am Shraddha Babla.
And I'm Neeraj Shah. In the next 30 minutes, we deep dive into specific trends and have some specific conversations with managements in news. But first, the headlines at the start. Week Wednesday on the Lal Street as both benchmark indices trade with deep cuts. Nifty hovers around the 10,350 level. Broader markets outperform. Banking stocks are top Nifty losers in trade after the RBI goes into damage control mode, discontinuing letters of undertaking and letters of comfort as trade credits for imports into India. The by-election results for two Lok Sabha constituencies in Uttar Pradesh has begun. BJP is leading in Gorakhpur. Samajwadi and Bahujan Samajwadi Party combined is ahead in Phulpur. And Professor Stephen Hawking, the renowned British physicist, passed away at the age of 76 at his home in Cambridge.
All right, let's first take a quick look at how the markets are faring at this hour. In line with the global cues, Indian markets are also seeing some selling pressure. Sensex has fallen by over 200 points now. Nifty is trading about 0.6% lower, dragged mainly by financials and also heavyweights like Reliance Industries and ITC, which are both seeing cuts of about 1% or so. Barring IT, most sectoral indices are trading with a negative bias. The market breadth, however, so far is equitably distributed between gainers and losers. Any stock that you want to highlight?
No, frankly, it's all about what's happening to PSU banks, Shraddha. I just thought I want to mark a couple of names which had done very well yesterday and just quickly show what they're doing in the session. The future consumer enterprises should be one that should come up on the screen. Was up a big 19.5% in trade. Yesterday was FCEL, and in today's session coming off a little bit. Did manage to wade into the green territory for a brief bit, but right now in the red, maybe in line with the market mood as well. The other one is this entire cement pack. The likes of Shree and Sanghi had a fabulous outing the last few days. In yesterday's session too were up and about. I would guess that in today's session there's a bit of a rationality out here. So 3% off for Sanghi. Shree Cement, which was up about 4.5% in trade yesterday too, is trading very, very flat.
All right, then let's tell you what we have lined up on Trend Spotting for you today. First, we will discuss the rationale and implications of the Reserve Bank's scrapping of LOUs and LOCs with Rajkiran Rai of Union Bank. And after that, we will discuss the growth prospects for IOL Chemicals and Pharmaceuticals with the Joint Managing Director Vijay Kumar Garg. And what has been weighing on Balrampur Chini mills, we will ask the Managing Director Vivek Saraogi. Well, now, moving on to the first discussion, and in a bid to crack down on fraudulent transactions, the Reserve Bank of India has banned banks from issuing letters of undertaking and letters of comfort for imports into India. That's too with immediate effect. To discuss the rationale and implications of this move, joining us on the phone line is Rajkumar Rai, the Managing Director and Chief Executive Officer at Union Bank. Good morning, sir, and thank you very much for speaking to us. Sir, do you think RBI's directive to ban these LOUs and letters of comfort is justified because it comes on the back of a large, of course, but single fraudulent event? So was discontinuing these instruments really the ideal solution?
This is a decision taken by a regulator. They must be having adequate data points and would have analyzed before taking this decision. But this is one of the ways of working capital funding. It should not impact the way we fund these corporates. There are other ways of funding. Because LOU was misused by one of the corporates, so I agree. But maybe the technology in the banking also was not able to really control misuse of these LOUs. So it's a decision taken by the regulator. Let us accept it and manage it.
Right, sir. But bank guarantees can be misused as well, correct?
Agreed, but then these are more of documentary credits, particularly the letter of credits when we issue, whereas LOU was cheaper and a very easier version. So where the documents are not collected, basically the dependence on issuing bank was high. But here the other side, other leg of the transaction also had to be based on documents, and other bank is also supposed to verify the credentials. So it will be more safe.
So how will the discontinuation of these LOUs and LOCs impact trade financing, and does it also mean that the risk premium and hence the cost of borrowing for genuine companies will go up as well?
Yeah, second part of your question, like the cost of credit may go up slightly to corporates because buyer's credit was a cheaper option. But then when it comes to affecting the working capital flow, I don't think it will have impact, because when we assess the working capital of a company, we totally assess the working capital cycle, and we give the sub-limits for LOU, letter of credit, bank guarantee and other things, even post-shipment credit included. So it will be within the total limits. So it will move from one sub-limit to other sub-limit. So total working capital provided to the corporate will not change. Yes, cost may change a bit.
Mr. Rajkiran, the fear that a couple of experts or analysts suggested to us was that while it may not have an impact for some of the larger players, for the MSME and particularly the small scale or the minute micro cap companies, which may not form a large part of your portfolio, but maybe for some of the smaller banks, they would have been dependent on such modes. And now, because they will not have exports or collateral enough to be able to give as pledge, their funding requirements might take a big hit, and that might be a bit of a freeze for such companies. Would you agree with that assessment?
No, it is wrong. Sorry, it is wrong. Actually, it's a wrong assessment. See, LOU is also a working capital assessment. We don't sanction LOU standalone without assessing the working capital requirements. If I'm sanctioning LOU, I would have done a proper assessment of that corporate. So if I'm not issuing LOU, I'll give him some other part. So I don't think if a working capital is assessed and sanctioned, just withdrawal of LOU is going to stifle the working capital flow to these corporates, whether it is small or big. If the assessment is done, bank will provide him the working capital in some other way.
I'm guessing from whatever little I'm understanding from this conversation, you seem to be suggesting that this makes sure that the doors to LOUs and therefore some problems coming out of that area seem to have closed. It will not really impact financing or funding for India Inc. by and large.
You are right. You are right.
Okay. So what part of the bank's business came from issuing LOUs and LOCs, and if you could share that number?
Actually, LOUs was less than 2% for us of our credit portfolio. LOCs are a bit like the letter of comfort, actually. Like it is put together, actually. It is below LOC and LOE put together below 2%. And it is more on the term finance for us, actually. If you take, for example, the solar players, once the term loan is sanctioned, what they do is they keep the term loan sanction on hold, and based on that, they take a letter of comfort and arrange foreign funding, which is much cheaper. At the end of 1 year, what they do is they convert it to Indian rupees, which is much higher, actually. So that's how they manage their cost. So most of our LOCs are issued on that direction. Yes, the trade finance also we do, so, but then it is not much.
So trade and finance would form, again, what percentage of the bank's fee income?
So that I will not be able to give upfront that number. We will share with you later, because I do not have that number right now.
Not a problem, sir. Also, just wanted an update on if you've heard anything from PNB on the payments against LOUs in the Nirav Modi case.
I'm very sure the payment will come. At this point of time, since we are discussing and trying to sort out the issues, I don't want to discuss on this issue at this point of time, but I'll assure you that the payment will come.
Okay, fair enough. Sir, I also believe that Union Bank is planning to auction loans worth about 6,000 crores, for which an online auction was supposed to be held on 15th March, and correct me if I'm wrong. So what kind of a price are you expecting to get from these assets? Any indications of the haircut estimations that you all have made?
We have actually put the reserve price on the site, actually. So like below that we will not go. We have assessed fairly our reserve price and put it. See, our bank has a 57% provisioning cover. It may not be account-wise 57%, but overall we have a cover of 57%. And if you see our net NPA, we are around 6.96. So we are trying to be below 6%. That's why we are trying to bit aggressively trying to sell these assets if we get the right price. So, but then again, 12th February guidelines of Reserve Bank of India, there may be some spike in NPA slippage. So that's why we are not very sure. Otherwise, this plan is to bring down our net NPA below 6%.
All right. Sir, for these assets that you plan to auction, some of these assets also include power plants. Is that correct?
Yes, there are two big power plants.
Okay. Sir, of late there have been a lot of talks, around the stress that the power sector is facing. Could you tell us how much of the slippages in the third quarter came specifically from the power sector?
I think there was one major account which was around 500 to 600 crores in the last quarter. But then most of these SDR, S4As which are under threat now in this quarter, the major portion is flowing from the thermal power.
Okay. Sir, it is also believed, like you said, that most of the private thermal power capacity is at a high risk of being declared as an NPA. And last week, the Power Minister also expressed concerns over stress in this sector. Just want to understand, is this something that you have been experiencing at your bank as well? And what is the proportion of your power exposure that you believe could turn into stressed assets over the next 1 or 2 quarters?
I think a major portion of the thermal power plants will slip to NPA because this forbearance of SDR and S4A is withdrawn. So major portion will slip in this quarter and next quarter. That's what I fear. So, but then we have already factored in those slippages in our projections mostly. So we will come up with the guidance when we are clear on the guidelines of the RBI, because we have represented to RBI to continue the forbearance for some more time. So let us see if they modify some of the guidelines, it will be helpful to us. But otherwise, most of these thermal power projects have a threat of becoming NPA.
So just one last question before we can let you go. I wanted to understand what is the kind of impact that we will see on the provision and the NPA number in Q4 on the back of RBI's framework on stressed assets that came out on February 12th.
See, my standard assets under SDR and S4A is about 4,600 crores. And that is where the immediate impact will be there.
Okay. Sir, but if you could tell us what kind of a change we could see in the NPAs?
It is very difficult to predict at this point of time. So we had done all these disclosures in our 31st December results, that what is the portfolio we have in SDR and S4A numbers which are standard. And we have factored in some accounts which are likely to slip also during this quarter. So addition will be there if the RBI do not, if they don't change the guidelines. So it will be slightly higher than what we have projected.
Okay. Also, sir, what is the kind of impact that you see of the hardening of bond yields on treasury income, because that has continued from the last quarter as well?
I may have a similar impact what we had in the last quarter.
Sir, is there a possibility, do you think that the RBI will allow to move some of these securities to the HTM category, and if so, by what extent could that help?
It will definitely help. So at this point of time, I do not have a guidance on that, but then that will be a very good step from RBI if they permit us to do that.
Okay, Mr. Kiran Rai, thank you so much for joining in today, Mr. Raj Kiran, and giving us your thoughts. Appreciate your time. That's the MD and CEO of Union Bank. The long and short of it, from an industry perspective, is that he doesn't believe this will result in any kind of freeze for the sectors in focus, particularly small gems and jewelry companies or some of the other importers as well. Remember, while the common focus goes on the gems and jewelry space, that's not the only pocket that gets impacted. The market's trading at the lowest point of the day. I would presume the Nifty 50 now down 71 points. The Sensex is down about 220 odd points. So it's not been a great day, and the sell-on rally template completely intact. However, yesterday we spoke to some analysts, and one of them had to speak about put some thoughts on IOL Chemicals and Pharmaceuticals. Stock may be trading under pressure, has gained almost 4-5% in the last 5 trading sessions. More importantly, the recent quarter numbers were very strong, and the belief that certain people have is that the quarters ahead could give in some really robust growth numbers. To understand what business is looking like and the outlook ahead, joining us on the show is the Joint Managing Director, Vijay Kumar Garg. Mr. Garg, good having you. Thank you so much for taking the time out. Can you tell us more about your company? From what I understand, you are a specialty organic chemicals and bulk drugs company. What kind of business segments do you operate in, and how has business been over the last 3-4 years?
So we as a company, we were a chemical company. So in last few years, we have diversified the company from basic chemicals to pharmaceuticals. So in pharmaceutical, we came up with the one product in pain management, that is ibuprofen. So in last 5 years, if you see the numbers, the turnover in pharma sector is 50% of the total turnover. If you see the growth of the company, see from last 3 years, we are growing at 30% numbers. In 2015, we were at 650, 16, 17, 775, and this year we'll be touching around 1,000 crore. So the revenue which we are expecting is from pharma. It's 500 crore will be from pharma, and 500 crore, rather 600 crore will be from pharma, and 400 crores will be from chemicals. In chemical sector, the sector was under pressure. So earlier we were having 2-3 products, but there we were having certain kind of problems. So we have stopped few chemicals and concentrated on one green chemical, that is ethyl acetate. So today we are operating with a capacity of 6,000 ton per annum in ethyl acetate, whereas for other chemicals we have stopped the production. So we as a company has decided to grow up in pharma sector. So we came up with the product ibuprofen. Ibuprofen today, IOL is the largest producer of ibuprofen in the world. So we are having a total 30% of the world share for this particular molecule. So we are having all kind of approvals, like our site is US FDA approved site, EDQMI approved site, and all the Japanese, Korean, all accreditation, Anvisa for you can say Brazilian market, all kind of approvals are with us. So in pharma sector, growing further, what we have done is we are coming up with the new molecules. This year we have launched 3 molecules in the market. We have come up with a molecule metformin, which is anti-diabetic this year.
Right.
In fenofibrate and clopidogrel. And one more molecule this year we'll be launching is UDCA, that is ursodeoxycholic acid. So with this,
No, so with all of these factors in play, and I looked at the list of the companies that you supply to your customers, include all the top pharma companies. What is the kicker that will come in? Because I heard you mention that you've grown at a healthy growth rate for the past 3 or 4 years. When we speak to analysts, they talk about some exponential growth rates in FY19 and FY20. What are the kind of growth rates that you believe you will clock in FY19, FY20, both on the revenue side and on the operational side? How would your operating profit margin shape up over the next 3 years?
Next 3 years, we are expecting minimum growth of 30% on year-to-year basis as far as the revenues are concerned. As far as net profit is concerned, it will grow with the much pace. You see, if we see the past growth in last 3 years, if you see the numbers in 14-15 and 15-16, our company was not performing well. We were in a negative play. So in 16 we turn around and we come in positive. So in our, you can say, percentage of margins were around 1%. I'm talking about PBT, and EBITDA was 13%. So this year we are expecting EBITDA margins of 14 to 15% with a net profit of 3 to 4%. Next year we are planning to have around 13 to 1400 crore of revenue with an EBITDA margin of around 17 to 18% and PBT of about 6 to 7%. and in FY20 we are expecting somewhere around 16 to 1700 crore of you can say revenue with an EBITDA margin of 20% and PBT of around 10%. So if you see the projected numbers which we are having, the growth on in case of revenue will be of average 30% per annum, whereas EBITDA and our net profit will increase substantially. It may increase by you can say 70 to 80% or more than that in coming 2-3 years.
Mr. Garg, Garg, you did say that you're expecting EBITDA margins to go up from the current 12% sort of levels to even 17-18% over the next 2-3 years. That's your internal estimate. Just wanted to understand what is going to help drive that kind of margin growth. Do you expect some sort of operational leverage to kick in? Is it the product mix, or do you expect pricing trends to get better?
Yes. As I told you, today we are the largest producer of ibuprofen in the world with a 30% share. So we are further expanding in ibuprofen. Any kind of expansion in ibuprofen, say today we are having 8,000 tons of ibuprofen production this year. Next year we are expecting 9,000 tons, and you can say a year later we are expecting around 10,000 metric ton of ibuprofen production. So this 1,000 tons will increase. Substantial increase will happen, because for that I have to add only raw materials. So my margins will increase substantially, like in the same premises with the same equipment, with a little bit of debottlenecking, we will be adding 2,000 tons of ibuprofen. Plus, coupled with this, since the ibuprofen shortage is there in the market because of some problems in the you can say in Chinese market, because there are 3 Chinese active players earlier in the market. So we are expecting increase in demand of ibuprofen. So with increase in demand, the prices will also increase. So production, at the same time prices, both will add to the margins substantially. Along with this, our new products, as I told you, we are launching 5 products. So revenue will come more from these products, which we will be adding in next 2 to 3 years.
Mr. Garg, ibuprofen prices have already gone up significantly. So you are saying you are expecting a further price rise on ibuprofen itself?
Yes, definitely, because significantly, if you see the Indian scenario, in India, the price rise is not so high if I consider the US and European market. So in the European market, the price increase is almost all 50%. From the last, if you see the data for last 3 years back, it was selling at around $10. Today, ibuprofen is selling at $15 there in the US and Europe. So in India, the increase is just you can say 20 to 30%. IOL being a Indian player 3 years back, so we have not got that kind of margin numbers in our balance sheet. Whereas now our exports are increasing substantially, because we got US FDA and EDQMI certification 3 years back. So in pharma sector, if you see 1.5 years is required for, after getting the approval to get the customer on board. So this year we are getting more and more customers in the US and Europe. So that is why our substantial increase in export will help us to increase our profitability.
Mr. Garg, just one final question, Shraddha.
Yeah, so I just wanted to understand if yesterday's directive of RBI to discontinue the practice of issuing letters of undertaking and letters of comfort will actually have any impact on your company.
No impact on our company because we are not using this LOU. We are using letter of credit. So on LC limits, they have not. RBI has not kept the same thing.
Great.
So in our case, it's the LC, not LOU.
Okay, Mr. Garg, congratulations. Rather, wish you all the best for all of these numbers and a healthy business growth for 2018 and 2019 as well. Thanks for joining in today.
Thank you, sir. Thank you very much. Thank you.
Very bullish management of IOL Chemicals and Pharmaceuticals, but not so bullish for Balrampur Chini. Hasn't been the sweetest of years. 2017 wasn't, and 2018 also hasn't turned out to be a great year. The management joins in to talk about what lies ahead, and Yash Upadhyay joins in to take the conversation forward. Yash.
Thanks, Neeraj. First of all, let me ask you that what is the amount which is outstanding in terms of K in arrears for the current sugar season, and if you can give us that breakup for the same amount in UP.
Arrears have crossed 15,000, and as of now, right away, I don't remember UP, but UP should be about 5,000. But I'm not so sure, but overall is about 15,000.
Oh. Okay, and so how much further do you see the prices falling from the current levels, and what, according to you, would be the realistic levels for prices to stabilize?
Very difficult to be able to predict that. But having said, there is a lot of pressure because of there is production which nobody ever imagined, and because of that, and there's no step to yet show the way on exports or anything. There is a huge surplus this year, let's understand that. It's huge. Production is going to be up 50% from last year. So prices are on a downward trend, and as of now, I cannot predict, the levels.
But sir, for our understanding and for our viewers' understanding, can you share any ballpark figure?
It is very difficult. Right now, UP is like 31 rupees ex-mint. It's tough to hazard a guess, but I think it could go down 30, below 30.
Okay, thank you so much. Back to you guys, Shraddha.
Thank you, Yash. But with that, it's a wrap on this edition of Trend Spotting. Up next is Hot Money. Stay tuned in.